For more on the current collapse, let's bring in Nathan McCauley, co-founder and CEO of digital asset bank Anchorage Digital. It's great to have you. Appreciate your time, Nathan. As we sort of take stock of the layoffs, not just at Coin, but BlockFi and Gemini and Crypto.com, are these the kinds of moves that will lower your cost base enough to continue to do business well?
So I think a lot of what we're seeing here is a kind of a pullback in the retail businesses. A lot of the growth in some of these retail-oriented businesses, say Crypto.com, Coinbase, and others, is driven primarily by trading volume and speculation from retail, which just isn't there as much anymore with, say, Fed monetary policy, overall tightening of the economy. And so you start to look at across the board retail-oriented crypto businesses, and some of them just need to pull back. Like Brian said, there's been some exuberance in the markets and a need to really adjust that to the new reality that we're facing.
Right. Do you think a reversal in Fed policy, whenever it does come, will then result in a resumption of trading activity?
Yeah, I think so. As we look at basically cost of capital and overall market infrastructure here, as there's more money available, people, retail and institutional, frankly, like to allocate into crypto. On our side, Anchorage Digital is a purely institutional business, and we have seen institutions are sticking around. They are staying in the crypto asset class. We don't see them exiting their positions. And so despite the fact that there is quite a lot of volatility going on, institutions are still holding on to their crypto and looking to expand their businesses over time. One of the great things about the crypto market is there's a long tradition of building the next set of incredible features, incredible products during bear markets. And so I think one of the things we're going to see over the next, say, 12 to 18 months is an increase in time to build and looking at opportunities to build new stuff while the Fed takes its time to adjust the monetary policy. It's not as if the fix to inflation is going to happen overnight. This is something that we're going to have to strap in for quite some time, likely. And so there's going to be quite a lot of time to build the next set of crypto services, I think.
Well, you mentioned a long tradition. I mean, nothing feels particularly long about the history of crypto.
That's right.
In particular, going through a period like this where interest rates are rising dramatically. I mean, would you agree with that? You talk about a new reality, and I'm curious as to how you define that then.
So I think the reality in crypto is that we go through bear and bull cycles all the time. So we started Anchorage in 2017. This is our third bear cycle. In each of those bear cycles, say 2018, 2020 with the beginning of the pandemic, and now entering into this one, we've invested in the business. We've looked at ways to grow. We've looked at ways to expand. And many of the crypto businesses across the ecosystem are going to be looking at doing that as well. The thing that's different about this one is that there's a bear market that is backdropped by an overall economic bear market, which is really going to be a test of crypto. Does crypto respond and act as the inflation hedge that we all think it might, or does it tend to track with the markets like it's looking like it's doing right now?
Right. What about confidence, and it being eroded in terms of many of the people who've owned these assets, who are watching them decline dramatically or unable to actually withdraw them? How important is that, and what impact will that have in the future growth of this asset class?
So I think you've got two things to think about when you think about confidence. You think about confidence in the asset class itself, which likely shouldn't be that eroded because, Bitcoin and other cryptos are certainly down a lot this year, but they're down the same as many of the tech stocks are. In many ways, they're performing exactly like the fintech stocks, or maybe even a little bit better, given that Bitcoin is still up from pre-pandemic levels, whereas most of the fintechs and other NASDAQ stocks have retraced all the way back to pre-pandemic levels. So I'd say confidence in the asset class is likely to remain high, just given the overall backdrop. But the other aspect of confidence is the counterparties. Which counterparties do you work with? Which counterparties do you interact with, whether you're retail or an institutional? And this past several weeks has been a really kind of a masterclass case in looking for working with regulated financial institutions, whether that's working with regulated stablecoins, whether that's working with regulated lending platforms, custodial platforms. And so we think here at Anchorage Digital that more of this business is going to go towards regulated financial institutions. We, as the first national bank to hold crypto, feel like we are part of that trend and look forward to the increased trust in the regulated financial institutions.